Now let's drill down on that 2000 through 03 time frame using simple market signals. Now understand that this is backtesting, okay, because I didn't have the model completed then, all right? The model finally came together in 2017, so I want you to understand this is backtesting, but in backtesting this is what would have happened, all right? Simple market signals would have been red for the majority of this downturn, all right? So now let's drill down on this and see what the numbers look like. So the signal would have went red on the S&P 500 at 1450, at the 1450 level, in September of 2000, and then the final signal, the final green signal, would have went green, right? The signal would have went green at 890 on the S&P 500 in April of 2003. So there was a total of 560 S&P 500 points in the red zone. That is a 38.62% loss. Now, if you lose 38.62%, it takes 62.92% to get back to break even. And again, you know that takes years. We've seen that, okay? It took years to just get back to 1500, 1550. So this, again, is the problem with losses, all right? So again, let's take a look at that same chart. So you can see here that during this time frame, the signal would have been red for the majority of that downturn. Now, let's really zero in here. Let's focus in on this time frame, because I want you to understand that there's what's called whipsaws that happen where the market tries to rally and the rally attempt fails. So that initial signal at that 1450 level was here, and you can see here, hopefully you can see where my cursor is, but as we fell down, the market tries to rally here and it didn't hold, all right? The signal would have went green there, and then a week later the rally attempt failed and we got a red signal, okay? And then the market fell again. The market tried to rally. We got a green signal there, if you can see the cursor. A few weeks later, the rally attempt failed. We got a red signal, all right? So the key here, and the way I use this, is I'm not invested when the signal's, I'm in cash when the signal is red, okay? That's the way I design this. Now, if you're going to employ this, you have to figure out how you want to use it, but I would encourage you to at least minimize your equity exposure during the red signals. But assuming, like the way I use it, that I'm in cash when the signal's red, and then I get invested when the signal is green, you would take some small losses here, right? You get in the market, and then a few weeks later it fails, and it may fail at a slightly lower level, right? The red signal comes out at a slightly lower level than what the green signal was. So you may take a small loss there. Again, the same thing happens here. It goes green, goes red, and then you had another one of these whipsaws. Okay, these are called whipsaws, where you get in, and again, the rally attempt fails. This is just the way investing and trading works, okay? Then the final signal, the green signal, where the market finally went green and held, happened here. And then you can see that we took off, and to the right of the chart there, we started to climb out, all right? But this is what would have happened. Again, this is hypothetical. I went back and did the back testing on this, but I just want you to understand what I meant by the signal would have been red during the majority of the downturn, but there was a few failed rally attempts where the signal would have went green, and you potentially could have gotten in, and then within a week or two or so, maybe a month later, you would have had to get back out and perhaps taken a small loss. The point is, don't take big losses, okay? If you're going to be a successful investor and trader, you cannot take big losses. If you would like to find out more about becoming a successful investor, I would highly suggest you watch my information-packed Successful Investor webinar. It is out on my YouTube channel. I will also leave a link to that webinar in the description box below this video. The webinar is about an hour long. It is information-packed. It's going to be one of the most important hours you have ever invested in yourself. That I promise you. So what are the next steps? Watch my Successful Investor webinar. Watch my other YouTube videos, subscribe to my YouTube channel for ongoing finance and success education. Please give me a thumbs up on this and other videos that you like. Leave a comment on my videos and share my videos and my YouTube channel with your friends, family, and colleagues. And please feel free to connect with me on social media. Thank you so much for being on this video. I really appreciate it, and I look forward to seeing you on the next video.